Well, good morning, everyone, and welcome to BDO's Working in Australia webinar series. And this session is going to be dealing with fringe benefits tax. Very timely as we approach the 31 March year end for the fringe benefits tax year. And hopefully the information that you receive today will make that a smoother process for you this year. Just before I introduce the speakers for today's session, just a few housekeeping points for you. We would love to get some questions. We've already received some questions during the registration process and we've incorporated those into the session today. But if you do have further questions, please submit them by the questions pane. We have quite a few attendees today and we also have a very full schedule. So we will try and get to as many questions as we can, but if we can't get to your question, look, we will endeavour to come back to you separately at the end of the session. The slides for today's webinar will be available as a handout for you to access. If you're having any technical difficulties, please click on the support link that's available there and you should be able to get some assistance to get back onto the webinar with ease. Finally, after this session finishes, we'll be sending you through a follow-up email, and that email will contain the presentation slides. It'll contain a link to the recorded session so you can watch it over and over again, or perhaps share it with your friends and relatives. And it'll also include our contact details in case you have any further questions. So joining me today and actually doing all of the legwork, we're thrilled to have three experts in the field. Firstly, we have Andrea Ross from the Australian Taxation Office, and we're delighted to have Andrea join us today to give some real insights into what the ATO is seeing with FBT and to give some assistance then around what we should be focusing on as preparers and lodgers of FBT returns for the fiscal year 2023. Also in Sydney with me is Ben Watkinson, who's a director in the practice, the employment taxes and FBT practice here in Sydney, and Stephanie Kalavritinos, who's in BDO in Melbourne. So the three topics that we'll run through today will be ATO focus areas. We'll also go through a general overview of fringe benefits tax, and we'll also touch on some recent law changes which will be relevant for the fringe benefits tax compliance season ahead. So without further ado, I'll hand over to Andrea to talk through the ATO focus areas.
Thanks so much, James. It is really lovely to be with you all here today. Firstly, I'd like to start off by respectfully acknowledging the traditional owners and custodians of country throughout Australia, where we're all coming from. I'm coming to you from the beautiful Wiradjuri lands. I'm based in the Albury office here, and I'd like to pay my respects to their elders, past, present and emerging. What I'd really like to chat with you all about today is, I'll start off with the ATO focus areas. As you can see on the slide there, we really do have quite a focus on education. So what we're really looking to do is make sure that we've got public advice and guidance products and a suite of tools that is available for people to use so that, you know, it helps people to understand their obligations and that they've got, you know, a really good basis on which to, you know, register, report and lodge and pay their FBT where that's appropriate to do so. So we're really looking to focus on making sure that our web content is up to date. We've actually recently done quite an extensive review of the ATO web content when it comes to FBT. That was only published, I think it was last month, so worth going on the website and having a look there. We also run really quite regular webinars on the most common fringe benefits, those being CARS and expense payments. You can find a link to that on our website and register there. So they're live and interactive webinars that we run quite regularly. We've also got a series of clips on our ATO TV site that actually work through how to calculate car fringe benefits, which is a pretty common fringe benefit, as you're probably aware. We've also got a quarterly FBT bulletin that we issue, and you can find that how to subscribe to that on the ATO website as well. The other thing that we really do is we check compliance with employers to make sure that they are meeting their compliance obligations. Our focus there is really to make sure that they understand how to comply going forward. So we undertake targeted risk-based reviews and audits to address non-compliance. And we also include firmer action where we need to do that. I might flick over to the next slide. Some of the things that attract our attention, you know, some of the common mistakes that we see, and I'd like to go through what some of those are and how you might avoid them. So our biggest concern really is around employers who provide benefits but don't keep the appropriate records to confirm their FBT position and don't lodge and pay when they should. So some of the areas that we see people make mistakes are firstly around car fringe benefits. So we see a lot of people claiming 100% business use or a really high proportion of business use that isn't really consistent with the actual use of the vehicle. We often see logbooks that aren't valid or a logbook that isn't really representative of the actual patterns of travel. And probably a big one, and it probably goes to some of the myths that are out there in FBT land, is incorrectly classifying vehicles as eligible commercial vehicles, so exempt, without actually considering whether the private use of those vehicles was limited. That's quite a common one that we see. The next one is really around employee contributions. So in that regard, we see reporting employee contributions in their FBT return, but not reporting the actual amount in their income tax return or reporting it at the wrong label. The other thing we see is incorrectly applying employee contributions to reduce their FBT liability to nil. And in relation to reportable fringe benefit amounts, we use data and analytics to identify discrepancies that we see between the reportable fringe benefits amounts and the fringe benefits reported on the FBT return, the employer's FBT return. So common errors in that regard include where we see reportable fringe benefits amounts on an employee's annual income statement, so what's reported through STP, but then an FBT return isn't lodged. We would expect to see an FBT return lodged in those circumstances. Another one is where an employer will lodge an FBT return with amounts that really should be included as reportable fringe benefits amounts, but they're not included in the income statements for the employee. Another common error that we see around reportable fringe benefits reporting is where included in the RFB reporting is employee salary sacrifice superannuation contributions that are made under an effective salary sacrifice arrangement. Those don't need to be included in the RFBA, and we see a couple of mismatches there, so don't get fooled down that trap. So some common mistakes to avoid, and really what I'm going to do is talk through here the 4 pillars for FBT. So firstly, we need to identify all of the different types of benefits that are provided. That's probably the key cornerstone. Everything will go on from there. Then we've actually got to make sure what the taxable value is. So you actually need to do the correct calculations when it comes to determining the right value and then calculating the FBT. Obviously, you then need to lodge a return and do the reportable fringe benefits on the income statements or payment summary for the employees. And then finally, and this is an important one, you do actually need to keep the records to support all of the information, to support the tax position that you have. Even if you don't need to lodge an FBT return because you're using exemptions or caps or similar, or employee contributions, you still need to be able to keep the records to confirm your FBT position. So that's a really important one. We identify employees who don't appear to have met their FBT obligations. We'll initially work with them as I said before, and their agents to review and correct any mistakes that have been made and improve their understanding of FBT going forward. Doesn't necessarily mean you have to pay FBT if you do things in certain ways, but we're really aiming to educate for future compliance. That's what we're aiming for. So where employers intentionally don't meet their obligations or they don't cooperate, we do take stronger action where we need to do that to discourage that sort of behaviour. We'll amend returns and we'll apply penalties where we have to. So if an employer is registered for FBT and they don't have to lodge a return, they really should send us a notice of non-lodgement for the FBT return so that our systems know that not to expect a return for that year. I think the due dates for those forms are the same as what a lodgement date would be. So really the key point here is around if you've got an issue or you're not sure, you think there might be a problem, come to us early and we can help you to resolve the issue and correct any errors. So I might go through some actual examples now of some of the things that we have seen. These are real life case studies, if you like. So I'll go through some of these and they're representative of some of the common things that we see in our compliance work. So in this first scenario, we've got an employer who was running a four-wheel drive business. They owned a number of dual cab utility vehicles. They claimed motor vehicle expenses in their income tax return, but they hadn't lodged an FBT return or reported employee contributions. What we found when we spoke to the employer was that they claimed that the vehicles weren't subject to FBT because they were only used for travel between home and work in accordance with the PCG 2018/3, which would have made them exempt for FBT purposes. However, during the audit, we did find that there was some significant private use of the vehicles for personal camping trips and other personal use. And regardless of whether there were, advertising logos on the vehicles, that doesn't necessarily mean that they're exempt. So you've actually got to meet those tests that are in the PCG and in the law when it comes to personal use. So as a result, the private use wasn't limited, and so because there was no records and there were car fringe benefits, the statutory formula method was used to calculate the FBT liabilities, and returns needed to be lodged in that circumstance. All right, we might move on to the next one. This one's more around record keeping. So this one was for a dentist who owned a number of luxury vehicles. They claimed motor vehicle expenses in their income tax return, but they hadn't lodged FBT returns and there was no employee contributions. The employer claimed that they had between 94 and 100% business use. However, when we went and had a look at the records, the logbooks didn't reconcile at all, and they weren't valid logbooks. The odometer records weren't maintained, and the purchase invoices didn't actually coincide with the data, with the date that the odometer readings from the logbook. So none of it all lined up. So as a result, the car fringe benefits were all calculated again using the statutory formula method, and returns were lodged on that basis. I'll flick over to the next one. This one's actually around business travel. In this example, the employer was operating a restaurant. They had 4 key employees and each had a company car registered to the company. And there were 60 other employees in that business. What we found was unreported car fringe benefits, and as a result they did lodge FBT returns for 3 years, and they indicated that there were employee contributions based on the statutory method for those 4 years. Income tax returns were also amended at that stage by the agent to include those employer contributions. During the review and during the investigation, we actually found that there were extensive expenses for overseas travel and meals that related to those 4 key employees. They travelled numerous times overseas together, and the travel occurred around the time of a significant event for one of those employees. The employer claimed that the travel and the meal entertainment were for research. However, there weren't any real records or travel diaries to support the business travel, and there were no records indicating any research was conducted or any results of any research. So as a result of that, and on review of the books of account, the employee contributions that I talked about earlier, they were actually disallowed because the contributions were actually made after the books of account were closed for income tax purposes. That's in line with MT 2050. Meal entertainment and expense payment benefits were raised in amendments to those 3 FBT returns. So as a result, that employer has a lot better understanding of how FBT applies in those circumstances. So look, I might just finish off there, but in wrapping up, you'll see on the screen there all of the resources that we do have, mostly on our website. I really would like to reiterate here that regardless of the situation that you or your clients find yourselves in, we are actually here to help you with your FBT obligations. We've got lots of resources available, as you can see on the screen. Like we've published just recently a guide on the electric vehicle exemption that was recently legislated, and we've got more guidance on the way. And for general FBT information, the best place to go is the website. Go to www.ato.gov.au/FBT. That is our primary FBT web content. You'll get your core information there. And then there's the Fringe Benefits Tax, a guide for employers, which has much more detailed information chapter by chapter. We also encourage you to subscribe to our quarterly FBT bulletin. That can be found on our How Fringe Benefit Tax Works webpage. There's a link on that webpage about how to subscribe to that quarterly FBT bulletin. So finally, and just before I hand over to Stephanie, I just want to reiterate that if you do have an error on your return or you need to amend it or make a voluntary disclosure, do come to us early. We are here to assist. With all of that said, I might now hand over to Stephanie. Thank you very much.
Thank you, Andrea. Thank you for your valuable input and time. And now we will look to cover a few of the following topics. So I'm going to begin with a brief overview of the FBT framework and key FBT filing dates for 2023, and a discussion on recent law changes and FBT updates presented by myself and in conjunction with Ben Watkinson from our Sydney BDO office. So what is a fringe benefit? What is a fringe benefit, and why do we need to pay fringe benefit tax? A fringe benefit is a payment to an employee, but in a different form to salary and wages. Fringe benefit tax is a tax which is levied on non-cash remuneration benefits provided to employees, and the benefits provided must be made in respect of their employment. This effectively means that a benefit is provided to somebody because they are an employee. The terms benefit and fringe benefit have broad meanings for FBT purposes. Benefits include rights, privileges, or services. As a guide to whether a benefit is provided in respect of employment, one must ask, would the employer have provided the benefit if the person had not been an employee? As we know, the FBT year runs from 1 April to 31 March every year, making it different to a financial or calendar year. FBT is paid by the employer irrespective of who provides the benefit. Therefore, it can be a benefit supplied by an associate, for example, of the employer if it is arranged by the employer. So there must be a material link and not a casual link to the employment arrangement. The definition of a benefit is separately defined from a fringe benefit in the legislation, and as I previously noted, a benefit includes any right, privilege, service or facility, which gives a wide definition to include basically anything. It is generally considered a non-cash benefit, but can be cash when it is provided by way of a reimbursement of an expense. So who is an employee for FBT purposes? An employee can be current, future, or past. So this basically means that just because someone has left the company, that doesn't mean they no longer have reportable benefits that was received during their employment. Current employees are those that receive salary or wages, which are subject to POIG withholding. An associate may include a relative, a partner, a spouse, or a child. An associate of an employer can also mean where a subsidiary company provides a benefit to the employer of the parent company. Although the subsidiary company provides the benefit, the parent company is liable because the subsidiary is an associate of the parent, therefore making the parent company liable for FBT. Lastly, a third-party arrangement can also be an employee for FBT purposes, where the employer has an arrangement with an outside party to provide a benefit to an employee. For example, the employer has an arrangement with a car dealership to provide a car to an employee. Moving on to the next slide. So a fringe benefit tax is a tax paid by the employer, and it's paid at the top marginal tax rate of 47%, including Medicare levy. FBT is also one of those few taxes that give rise to an income tax deduction for the cost of providing fringe benefits to employees, for example, meal entertainment, and for those and for the FBT paid. When the employee makes an after-tax cash contribution towards a benefit, which is subject to FBT, the taxable value of the fringe benefit will be reduced accordingly. Any cash contributions made by the employee are also typically considered to be subject to GST. It is also important to note that if the total value of certain fringe benefits provided exceeds $2,000 in an FBT year, the employer must record the grossed up taxable value of those benefits on the employee's payment summary or through single touch payroll by the due date for finalisation for the corresponding income year, which is 1 July to 30 June. Now let's look at this year's key FBT return lodgement and payment dates. The statutory due date for lodgement and payment of FBT returns every year is 21 May. Unless the date falls on a public holiday or weekend, it is the next available business day, making it 22 May for this year. The due dates for lodgement of FBT returns for all tax agents is 26th of June if the return is lodged via the practitioner lodgement service. Please note that the due date for payment under the lodgement program has been permanently changed to 25th of June or 26th of June for this year if you lodge your client's FBT return via the practitioner lodgement service. And if the client's FBT return is lodged by paper, the payment due date is 22 May for 2023. So that is a quick snapshot of the key FBT dates and what is FBT. And now we'll move on to some recent law changes in respect of fringe benefits tax, such as the new car parking taxation ruling 2021/2, the FBT exemption on electric vehicles, and the recent ATO developments on the proposed FBT record keeping concessions. So, on 16th of June 2021, the ATO released taxation ruling TR 2001/2, which is the final ruling. And this sets out the Commissioner's view on when the provision of car parking is a car parking benefit for the purposes of the Fringe Benefits Tax Act. The ruling finalises and expands on changes proposed by the draft ruling TR 2019/D5, which was previously issued by the ATO in November 2019. The changes will result in many more employers being subject to FBT on the provision of car parking to employees from 1 April 2022, so from last FBT year. The ATO has expanded on its view in this ruling that certain shopping centre paid car parks and other car parks with similar arrangements that were previously excluded as commercial parking stations in TR 96/26 may now be captured as commercial car parking facilities. The final ruling includes virtually all such car parks that charge a fee for all-day parking above the car parking threshold, even if it has a primary purpose other than providing all-day parking. So for an example, this may include alley parking at a hospital, at a shopping centre, a hotel, a university or airport, or even long-term parking. This applies even if its fee structure discourages all-day parking through higher fees. So this replaces the ATO's previously long-standing view in taxation ruling TR 96/26. So, and the reason for this is the ATO view changed because of 2 full federal court decisions handed down in Virgin Blue Airlines, and Qantas Airways. Next slide. So the new interpretation of the meaning of commercial car parking facility will result in many more employers being subject to FBT on car parking fringe benefits in relation to the parking they provide to their employees. As a result, we recommend that employers should undertake the following actions. So you should identify all instances of car parking provided to employees and begin a process to determine where there is a commercial car park under the new definition within a 1 kilometre radius of the business premises. You should also consider whether a market valuation will reduce the cost as compared to a commercial car parking valuation. Consideration should also be made on how best to determine the number of car parking benefits provided to employees, including the use of data analytics and completion of a 12-week register, or even the use of the actual method where applicable. They should also consider any appropriate communication required to manage internal stakeholders within an organisation, and appropriately accrue for any potential FBT liability that may arise, as this will become due and payable upon lodgement of the employee's FBT return later this year in June. So we strongly encourage that those employers who are not previously subject to FBT on car parking benefits obtain advice on the best available method to use to calculate the taxable value of these fringe benefits, as this may have a significant impact on the foreseeable FBT liability. So I will now pass to Andrea Ross to discuss any key ATO messages regarding car parking fringe benefits.
Thank you, Stephanie. Look, this is a key change for this current year. It is something that we really need to make sure that affected employers are aware of. Like you said, Stephanie, it is a result of the full federal court case in Qantas. So car parking facilities that charge penalty rates higher than the commercial rates are now considered to be those commercial car parking stations for the purposes of FBT. That doesn't automatically mean, though, that all car parks are in. So there's a couple of paragraphs in the updated ruling in TR 2021/2 that list the characteristics of those particular car parks. So if you look at paragraphs 20 and 21 in that ruling, that will give you the guidance that you need. I also want to remind everyone here that there is actually an exemption for small businesses and car parking. So if there is a small business with a total gross income of less than 10 million or an aggregated turnover of less than 50 million and you provide car parking, you're exempt from providing FBT on that car parking. So that actually also cuts out a lot of small businesses. So be aware of that one as well. We really encourage employers to look at their car parking, like Stephanie was saying. So if you're not subject to that exemption, have a look at this before you lodge your FBT return. Check whether these changes have an impact. Look at the indicators in the ruling to see if the requirements are triggered there, and document and keep your records so that you can confirm what the tax position is for car parking for that year. And the threshold rate for car parking is $9.72 per day for the year ending 31st of March 2023. Back to you.
Thank you, Andrea. Now let's move on to the proposed alternative record keeping requirements. So the government is introducing legislation to reduce FBT on record-keeping compliance costs for employers who maintain good corporate records. This measure was initially announced in the 2020 to 2021 budget. The proposed legislation gives the Commissioner of Taxation the power to modify by legislative instrument existing FBT record-keeping obligations to allow employers to rely on existing corporate records rather than the employee declarations and other prescribed records to finalise their FBT returns. But this is only where the Commissioner considers the alternative records as adequate. So there are 3 draft legislative instruments, and these are as follows. So we've got the Treasury Laws Amendment Measures of Consultation Bill 2022 on FBT record keeping. This proposes to amend the Fringe Benefits Tax Assessment Act to allow employers the option to rely on adequate alternative records as determined by the Commissioner, or keep and retain the designated statutory evidentiary documents in the approved form. The second instrument is the Adequate Alternative Records Travel Diaries Determination 2022. This outlines the adequate alternative records the Commissioner will accept as a substitute for a travel diary required under the FBT Act. And as we know, these travel diaries are very onerous in terms of record keeping to keep, so this will be, I think, welcomed with open arms. And lastly, the Adequate Alternative Records Relocation Transport Standard 2022. So this outlines the adequate alternative records the Commissioner will accept as a substitute for the employee declaration in relation to expense payment fringe benefits in respect of relocation transport reductions under Section 61B of the FBT Act. So once these are enacted, the new measures will apply from the start of the first FBT year following royal assent. If the Commissioner deems the alternative records adequate, I think time spent by employers on FBT record keeping will substantially decrease, and that's a good thing. So the draft legislative instruments and associated explanatory material have been released for public consultation. So now we await further discussions and royal assent. And I'll now pass on to Ben, who will provide an update on electric vehicles. So thank you for your time.
Thanks, Steph. So I think, as everyone is well aware, electric vehicles are sort of currently the flavour of the month. Everyone's, wanting to get themselves an electric vehicle as we, become more sustainable. And the Labor government's obviously, announcements and legislation to exempt the electric vehicles from FBT was obviously, a welcome step in this regard. But I guess there are a number of sort of tips and traps that you need to actually be aware of in respect of the electric vehicle exemption. It does apply from 1 July 2022, so last July, as mentioned on the slide up there. But the key sort of steps in order for the vehicle to be regarded as exempt is that the car needs to be a zero or low emission vehicle. So effectively that's a battery electric, hydrogen fuel cell or plug-in hybrid type vehicle. Secondly, the first time the car is both held and used is on or after 1 July 2022. So this means that you are eligible if you held the car, for example, owned or leased it prior to 1 July 2022, but it was not available for use until after that date. But where employers effectively have acquired a vehicle second-hand from a previous owner after 1 July 2022, they won't be actually eligible for that exemption where it's been acquired by a previous owner. Probably the main sort of gateway test as well is that luxury car tax needs to have never been paid on the importation or sale of the car. So effectively, in layman's terms, obviously the first retail sale of the car is actually below the luxury car tax threshold for fuel efficient vehicles, and that's currently $84,916 for the 2023 year. The ATO has confirmed that if you don't have access to this information, you can actually use other sources of information such as internet searches, a car report, or independent valuation to actually estimate the first retail price in order to see whether you fit within or under that exemption or threshold. Finally, I think an important consideration is that benefits provided under a salary packaging arrangement are included in this exemption. So effectively that does mean, when an employer does provide the employee with, a novated lease, which is, quite common now in terms of providing car fringe benefits. If that is a novated lease for an electric vehicle, we can effectively, subject to obviously meeting, the other conditions that we've talked about on that slide, fit within the electric vehicle exemption and the vehicle be provided exempt from FBT. So I think that's an important thing for employers to be aware of. If we just go to the next slide, yep. So there is a sunset clause that the government has announced for plug-in hybrids. So effectively, they will cease to be exempt from 1 April 2025. So obviously the exemption will continue for vehicles that were provided prior to this date. So there will effectively be, a transitional arrangement there. As well, the government has announced when they enacted the legislation that they will conduct a general review of the effectiveness of the exemption with respect to electric vehicles after 3 years. So Andrea, I think you sort of had some comments you wanted to say in terms of those couple of points there.
For sure, particularly in relation to the sunset clause for those plug-in hybrids, it's important to remember that from the 1st of April 2025, you can continue to apply the exemption for a plug-in hybrid vehicle that was exempt before that date, before the 1st of April 2025. You also have to have a financially binding commitment to continue providing the private use of that vehicle after the 1st of April 2025. And so for the purposes of being financially binding, an optional extension of that agreement is not considered binding. That's the key thing to be aware of for those longer term leases and so on. Back to you, Ben.
Great, thanks for that, Andrea. I think the other issues to be associated with electric vehicles are really important. I think one of the key things to really remember is that whilst the benefit is exempt from FBT, it is still a reportable benefit and needs to be disclosed on individuals' earnings statements. So either through the annual payment summaries that are obvious, annual payment summaries or income statements lodged through single touch payroll. Though it's reportable, it doesn't count towards caps for rebatable employers or PBIs, so they should still get their full relevant cap of grossed up benefits that they can provide to their employees. But I think, the key message to really take out here is employee communication around this reportable issue is key. Like, as we're all aware, individuals don't pay tax on reportable fringe benefits, but they're obviously used to calculate thresholds for various, either government repayments or government entitlements like childcare rebate, Medicare levy surcharge, HECS repayments, etc. So a reportable will often mean different things to different people, and I think it's really important that employers make employees who may be looking at, taking novated leases or, being provided with, company provided electric vehicles, that, there is still going to be a reportable, and to communicate and understand, what that means, and if there's any, action required to be taken in that regard. And interestingly, there's obviously two methods of, calculating car fringe benefits. We've got, which I think we've sort of touched on earlier in Andrea's presentation, we've got the statutory formula method and the operating costs. So obviously the statutory formula method is quite simple in terms of the logic of the calculation being 20% of the cost price of the car. So it may actually be, that employers, to calculate reportables for electric vehicles, may wish to use that method for ease of administration. But having said that, electric vehicles are, the current cost of the vehicles in the market is, quite substantially higher than, what a normal vehicle will be. So obviously that's, where you take 20% of a greater amount, you've got, a significant reportable. So, for an $80,000, electric vehicle, where we're using the statutory formula method, we've obviously got, 16,000 of taxable value, basically needing to be grossed up and reported on, but effectively there's going to be a significant reportable in that instance. So employers may look to obviously, obtain, as Andrea mentioned, the appropriate records to look at using the operating cost method to calculate the reportable. So where we have the operating cost method, obviously you need to get, a valid logbook from the employee that meets the criteria for a logbook, and keep detailed records of the operating expenses of the vehicle, and apply the effectively non-business use percentage to those operating expenses. So that's just really an important point for employers to really bear in mind, that whilst on the surface, it's great that obviously the electric vehicles are exempt from FBT, there is potentially, additional issues that need to be considered there, both from an employee communication, but also record keeping requirements in respect of reportables. A couple of other points just to draw out on the electric vehicle exemption is that there is also a misalignment with the depreciation car limit. So there's a limit that employers can claim depreciation on, where they provide an asset, and that's around sort of the 60-odd thousand at the moment, whereas obviously the luxury car tax limit for fuel efficient vehicles is at the 84,916 that we mentioned earlier. So there will actually be a non-deductible amount for the individual, for the company, sorry, in respect of where they provide an electric vehicle. Now, most salary packaging organisations will actually calculate that as part of the reporting that they provide to organisations. But I guess there's also an additional question to bear in mind as an employer is, are you going to bear that cost, or is that going to be, passed on to the employee through their package in terms of that non-deductible depreciation component? And again, I think it comes down to the point that we were sort of saying about the reportables, employee communication and setting all that out up front is really key. The last point there just on the slide is obviously the exemption at the moment only applies to a vehicle that's defined as a car under the FBT definition. So things like utes, utilities, motorcycles are not actually cars for the definite purposes of the FBT legislation. I know the guys that are producing the electric vehicles are, I think, potentially looking at bringing out some form of electric utilities and other type vehicles. So probably I watch this space in terms of, as 5 years ago, when FBT was drafted, we probably didn't think we'd need an electric vehicle FBT exemption. There might need to be some development or thought put to, how that exemption effectively evolves to deal with things like utilities. So if we move on, so the other thing also to bear in mind with the provision of any vehicles as well as electric vehicles is associated car expenses are exempt from FBT where they are provided in respect of a car fringe benefit. So expenses for electric vehicles include the following that may be exempt. So insurance, registration and road user charges, repairs and maintenance, and fuel. So I think the first three of those are pretty self-explanatory and easy to calculate. So they'll obviously be, you know, exempt from FBT. Fuel is obviously defined to include electricity, but I think this is a really interesting point in that, well, how do you actually quantify what the electricity is that someone uses to charge their vehicle? So if, you know, if you're at home and got your own, you know, home charging station, you know, does the employee, you know, need to keep, you know, a log to say, I charge my car from 6 p.m. to 8 p.m., you know, for 2 hours that night, and that was the electricity that I, you know, used as allocated to the vehicle. I think the ATO have recognised the administrative sort of difficulty associated with that, and Andrea, feel free to obviously jump in if you've got any comments, but I know on your website you basically put out that there will be some practical compliance guidelines around this point coming. So yeah, not sure if you've got anything further to add to that, but in terms of that was, you know, threatened to scheduled to come out in March. So is there any update on that?
We're still on track to have something hopefully published by the end of March. That's our aim.
Yep, great. So I think that will be really welcome development, because as we said, like it's quite difficult, you know, to be able to determine that. Like I think it's going to be really administratively onerous. So hopefully, you know, whether it's, we'll have to obviously wait and see what the ATO come out with, but whether it's, you know, a fixed amount per kilometre travelled or something like that, we'll obviously have to, you know, watch your space and wait and see. But as you said, that practical compliance guidance should be coming shortly. Couple of other points just to quickly cover off on. The ATO obviously have released that fact sheet that Andrea mentioned earlier. It's a comprehensive document. I think it's very good. It covers lots of the issues that we talked about. So I do obviously encourage everyone to have a look at that. And the point that was made in that fact sheet, which there was also some slight debate and uncertainty about, is, well, what happens if the employer provides the employee with an actual, you know, charging station to charge their vehicle? The ATO have come out and confirmed that, well, that actually doesn't meet the definition to be a car expense, and that will actually be a separate, you know, benefit that needs to be valued in accordance with the appropriate FBT rules. Just before we finish up and hopefully have some time for questions, on the point that I mentioned earlier, and that, you know, electric vehicles provided under a salary packaging arrangement are eligible for the exemption, I thought it was worthwhile just to touch on the potential savings that can apply where an employee does package the vehicle. So as we've got the example there, someone on 150,000, if they had personally bought the vehicle and paid for their electric car costs of 25,000 after tax, they would end up with net income of 84,433. Compared to someone who packages their electric vehicle, they end up with net income of $93,683, being a saving of $9,250. Importantly, we do have to bear in mind that the electric vehicle is a reportable benefit, as we've touched on. So, you know, it's not necessarily going to be, you know, for everyone. Back to that point that employee communication is key, because reportables are going to mean, you know, different things to different people given their personal circumstances. But it's an important thing to sort of bear in mind that there can be savings for the employee from packaging the vehicle if their personal circumstances allows it. So with that, I think that was all we wanted to cover on electric vehicles. I'll hand back to James, who I think is going to go through any questions that we may have.
Thanks very much, Ben, and thanks everyone for your presentations today. That was really insightful. We certainly did have a few questions that came through, and I might try and answer them as best I can, but I would welcome input from all of our presenters, particularly if I'm going off track. So the first question we had was around the evidence that an employer needs as to whether there is a car parking station or a commercial car parking station within a 1 kilometre radius, and whether something like a Google search would be sufficient. And I guess this is one of the really challenging things around the obligations that the FBT rules put on the employer. It's actually incumbent upon the employer to determine that, whether there's a commercial car parking station, which is why the ATO has been helpful in providing guidance around what is a commercial car parking station. And I would certainly say that something like a Google search is a really good start as helpful to provide that information. But certainly there are particular professional organisations out there that do market valuations and will do the assessment and tell you whether there is a commercial car parking station, and then the extra step to say what's the value of the car park, within that 1K radius, which might actually be less than what the employer is paying. So, look, there's probably a couple of things that employers need to do to make sure that they're satisfying those requirements. There was also a question around whether on-site car parking for staff members is subject to FBT, and the short answer is it can be. So I think the challenge here is that, particularly around the new guidance around what is a commercial car parking station, that you may have had employers in the past who allowed their employees to park on their business premises, and that's obviously not a commercial car parking station. And the hospital down the road may have charged a penalty rate in the past. That might not have been considered a commercial car parking station, so that employer would have not have paid FBT. Now, though, that will change. If the hospital down the road is a commercial car parking station, the fact that someone is parking on your business premises and not paying anything, that can result in FBT. So that's the key change that employers need to be aware of, and that can result in additional FBT liabilities this year as compared to prior years. And probably just one little quirky thing to sort of flag around that, and Andrea raised this around the exemption for small businesses, and that's absolutely right. So a small business entity that provides car parking that is not on a commercial car parking, it's not in a commercial car parking station, is exempt from FBT. However, if that small business is, for example, located in a shopping centre and the employees are parking in the shopping centre, which is a commercial car parking station, that exemption doesn't apply. So it could be that you have small businesses where their employees are actually parking in what is now a commercial car parking station, may find that FBT arises for them. So there's just some, as with everything with FBT, some quirky things around how the rules work. We had a couple of questions as well on other sorts of benefits around motor vehicles. And so there was a question which is kind of really more a commercial question as to whether we're seeing employers trying to encourage employees to take up electric vehicles because of the fact that they might be exempt from FBT. And look, certainly we are seeing some employers, particularly where the vehicles are provided to the employee, some employers obviously wanting to reduce their carbon footprint and providing more fuel efficient and emission efficient vehicles is certainly a way that they can do that. So we are seeing a little bit of that happening. Of course, we still see lots of cars being provided under a salary packaging type of arrangement or a novated lease, and really that's just an employee choice around what they choose to do. So it's a little bit of a mixed bag there, and still early days. So we'll see a little bit more of that perhaps in the FBT returns that we're preparing at the end of this FBT year. And just kind of mindful of time, so I'll probably just pick up one more question. So there was a question around entertainment benefits and where they are exempt from FBT under the minor benefit exemption, under the minor benefit rule, so provided infrequently and less than $300, as to what's the corresponding GST and income tax treatment of those benefits. And so the short answer there is that entertainment starts out as being non-deductible and not eligible for GST input tax credits. If it is subject to FBT, however, it flips and it becomes eligible for the input tax credits and also deductible for income tax purposes. So if it's exempt from fringe benefits tax because it is falling into that mine benefit exemption, it's not being subject to FBT. So you're still in this position where it's you don't get the input tax credits and it's not deductible for income tax purposes. So typically when employers are preparing their fringe benefits tax return and looking at all their entertainment expenses, you might find that there is an add back that's happening to the income tax return because there are some items that you would have thought would be not deductible for income tax purposes, but because they're being picked up for FBT, there might be an adjustment that way. So typically that's the way we see it, but there certainly needs to be, once the FBT return is prepared, some sort of interaction or thought put into what happens for GST and what happens for the corporate income tax return as well. So that probably covers the questions that we have time for, given we're bumping up against midday. Once again, I'd really like to thank the presenters, Andrea, Stephanie, and Ben, for their time in preparing for this presentation and for their thoughts as we've gone through today. So thank you once again to our presenters. Also a little bit of a plug going forward. So the Working in Australia webinar series continues to roll on, picks up huge momentum as we push towards the end of the financial year. And the next session that we've got planned is for the 5th of July, when we'll be discussing year-end employer obligations. So where you've registered for this session, please go onto the website, register for the next one, and we look forward to having you join us on the 5th of July. As I mentioned, if you have any questions, feel free to reach out to your BDO experts. Perhaps give Andrea a bit of clearance, but certainly the ATO has lots of information, and we would certainly encourage you as well to avail yourself of that information to make the FBT process as smooth as possible for you. So thank you everyone for joining us today. We look forward to seeing you on the 5th of July, and we hope that you enjoy the rest of your day. Thank you very much.